Good early morning, good peoples. It is Bruce with Targeted Wealth Creation, jumping in on Roundhill on all the W weekly pairs. And I will follow up this video with a comparison to Yieldmax. So we've now got 17 funds. I added WPay versus um, YMAX. I added Maggie versus YMAG and take those back, all back to their start date so they have equal time. And I realize that WPay isn't exactly equal to Y Max because it doesn't have as many funds, but I think the outperformance might surprise you. And that's why I'm doing it. Ultimately, I'll compare these to other ones as more people have similar. But right now, I think Roundhill is just kicking Yieldmax's ass. So but you need to see those head to heads on your favorite fund, even if it's Yieldmax. All right, guys. So NVIDIA, not a particularly well, it's been down the last day or two, but when you look at the weekly, it's only down 81 cents. But look at the last 6 weeks. See, this is what you always, I don't advocate, guys, being a trader if you can't be. In other words, if you buy income and you need income, you're working one job, two jobs, and your third job is trying to buy some Yieldmax, Roundhill, Neos, Granite, whoever. I'm here to help you compare funds, compare performances, and generally, this doesn't happen in most YouTubers. I give my opinion in terms of long term. Can you own this thing for 6 months or a year or 2 years? Right? In a lot of cases, the answer to that is hell no. Right? And then, so I would advocate to you guys that have a little bit of time, like on your weekends, to review it. I counsel people in my Patreon. I'll talk about that at the end. And there's some people that are doing a really good job of carving out some extra money. Like, say, I own PLTW, I own NVDW, and it runs way up and I expect that it could be pulling back. I'm not afraid to tell people, oh, okay, well, you got 500 shares. Maybe you call 300 your core. Every week I get income from them. And then the other 200 might be something like a trading. So when it gets really stretched, I want to sell those and I want to buy back in $10 lower, $15 lower. It all depends on the price here. But look at this. You see fluctuate, and I'm not talking about a dollar or two. It doesn't make any sense. But when it's $51 and all of a sudden 45, right now the markets, and I've mentioned this, the AMDs, the Nvidias, the Microns, I know they're not all in the income fund, but the semiconductor, these big chip companies, there's a lot of pressure on them, and I talk about why in my Patreon videos. I've mentioned in some of my other videos. So when I see that pressure in those things, I might go out and buy a SOXS and short the semiconductors with 3 times leverage. But those of you in these funds, AMDW has had a phenomenal run, right? We'll show it when we get there. But understand that sometimes it's good to take money off the table and buy it much lower. And trust me, it can go there very quickly. Remember, Roundhill has leverage. So you want to pick an underlying fund, not because it pays a lot of money, because it's trending up more than it's trending down. Well, that same impulse wave that might go up 3 to 5 months of massive outperformance to the upside can go to neutral. That's okay. You can hang on to it. But if it turns in a down wave, you really want to ride your income through that. Some of you are going to say, yeah, and I understand. Some of you have to. You don't really have that ability to watch it, to put orders in. But that's the kind of stuff I help people with in my Patreon. All right. So let's go. So here, I put this in here. All these things are extra things to pick up on. Most YouTubers aren't doing this. I know there's some good YouTubers out there that analyze how they write their options and do that. But there's also a lot of fluff. I like to show you, is this trending up or is it trending down? Well, if you've owned it for 6 weeks, you're losing money in NVIDIA because you've been your NAV from where you bought it 6 weeks ago is down $4.92, and you've been paid 330. Now, in the overall scheme of things, Nvidia's been great. The question is Nvidia over the next 6 months going to be what it's been for the last year, the last year and a half or two? And that's what we're always trying to look at and trying to understand instead of leave it and forget it, park it and forget it, right? I need income. Well, you may get income and all of a sudden when all they're doing is distributing back their money. Now, Yieldmax is infamous for that. At least on Roundhill, if you pick the right fund and own it in the bull segments, the impulse waves, then you're going to be paid extra. So that's why I don't it's not like I hate Yieldmax. I just, they're having to now go out and reinvent Ulti because Misty and Ulti just suck. I mean, I'll just tell you flat out. I say to anybody, even in the Roundhill, don't own right now a MicroStrategy underlying ETF. If you want to go with BTC, and right now it's not in a bullish setup, at least go with BITO, go with YBTC, BTCI from Niels. There are funds that have a better strategy, but and they're not using MicroStrategy. They're using BTC, they're using futures, they're using IBIT, FBTC from Fidelity as their underlying that's supposed to track Bitcoin. All right, guys, so I'm not belaboring that. Really dropped down, right? 39.40, under 40%. You don't see that often. You see one there, but people are getting 94, 101, 134, 79, 74, right? So this to me these look under pressure. These chips could get a lot worse. I know they're bigger than just a chip. They have a product, but it's based on their chip. All right, guys. So overall, if you're in it since 228 on payments and like 219 when all these funds, this first group of five were the five original funds that Roundhill launched. So you've collected $18.40 and $4.68 you've lost in the NAV. This was positive not that long ago. But still, you're up $14. It's not horrible. It's just let's see, they always say, in a market, there's 4 or 5 or 8 days that constitute the majority of the gains in a stock when a stock's a winner. So Tesla, same kind of thing, 776 and 352. It's even more lopsided, right? So I still like the tech of Tesla, the underlying overall, but the market's pretty challenging right now. We look very toppy in the Qs and these semiconductors and tech stocks. Okay, so 37 cents, 60% yield. Look at that. How long it's been? It's been this many weeks, 9.5, since you had a lower yield. And look at this, $5. This was positive. You were getting more than you were losing, but not the case with this last week, guys. Now look at this one. Look at AMDW, or sorry, that's Tesla. So not that bad, 19 and 19. It's nothing to write home about. You're not in this thing to break even. Oh, this could get worse. Yeah, it just did, guys. I needed to fix this. 46, and this one's going to go up when I go to 46 here. Every time I add a new week's total. Whoops, no, okay. So that's covering it. Oh, it is 47. Why did I just change that? Maybe it doesn't matter if it reads that upper line. It's like a null. Okay. I'll leave it on 47. I know I checked. There's so many changes, guys. This takes me forever to build this. I got to look at some more automation, for inserting the lines and pulling and it's a pain, but I can't think of a better one for me when I want to know this. So I'm really doing it for you guys out there. So a little better here. You love to see green and green. It's not massive, right? Since February 19, if you bought this fund, or sorry, that's not true. February 19 would say, you've gotten $10.43, but you've lost $8. That's not particularly great. It's $2.43 on 48. That's 5%, right? You can do that in a treasury bill. And then over 6 weeks, though, I'm over $2, right? These, I always just take the last 6 entries, right? So if we go up next week, we drop off this one, we drop off a negative 146. But again, who knows week to week? Yeah, 29, 33. That's 22%. It's not a big payer, guys. Oh, look at Koi. Based on Coinbase. Well, Bitcoin's not doing particularly well. Look how bad you've been destroyed here, right? It's nothing to do with the fund. Go out and look at Coney. Go out and look at COYY, right? They're all hurting. $4.10, right? Remember, your distribution is never going to be a negative. If they pay you a penny, that's a penny. If you get a penny for 52 weeks, you've made 52 cents, right? But I mean, I'm just being, silly. But this over 6 weeks is ugly. That's a $12 net loss. That's why this is essentially total return. Now, it's not pulled in, but that tells you everything. Now, you want to apply it back here, and then you can get a 6 week total return. But I do all that at the end and sum it for you anyhow. All right, so ugly for Coinbase. Palantir, love that stock really long term, but boy, it's been ass kicked as well. $10, 469. All right, that's a $5 loss, $5.44 loss, or 46, $5.46. Now, how's it done? All right, well, yeah, we should do that for Koi. So here's your Coinbase Koi. A little bit ahead, $22 to $20. But you take away some of these, look at this, a $12 loss, a $9 loss. You take away, there's $14 right there. 7 and 9, $16, $17. You're about $18 negative. I mean, they add the 153 to get back here, but you got $18 loss, right? I mean, if you'd have saw this and said, I'm going to sit on the sides for a while, you certainly would have saved yourself some money. So these things can be brutal, guys. All the fun. There's a 14 up. I mean, this thing, so it's still $2 ahead, but that's not how a lot of you do. A lot of you start seeing the big payouts and you chase these things, right? And if you paid 41 here after seeing a big payment, 114%, 91 cents, and you bought in this 40, 41, how you setting now? You're down $13, guys. Could have been worse, right? You could have bought here at 44. You could have bought here at 46. Now you're $18, almost $18, high 17s underwater, right? On that. Yeah, you've gotten some distributions, but talking about $2 or $3 worth. All right, guys. So just trying to set the idea. I'm not expecting you, nobody's talking about day traders, nobody's talking about a full commitment, but the markets, when the S&P or the triple Qs are going to go up 35% a year, everybody's a winner, right? If you halfway pick decent stocks. But guys, that's not the case going forward. We'll be lucky if we get 3 or 4% out of the S&P and the triple Qs, probably averaging over the next 5 years, because that's not where capital will stay anymore. I know a lot of you at FOMO don't believe that. But I already over at Patreon have people up 80, 100% that have been in the miners, gold and silver miners, for 5 months since August. Sure, if you bought it October 15th or 16th, you're probably still down 10%, right? And a week ago, you were maybe down 25%. But those of us that owned it in August, I owned these back a year before. So I'm still sitting on some 2 and 3 baggers. Okay. So if you haven't figured out the market dynamics, is where we're in capital rotation, 1 year out, 2 years out, 3 years out. The commodity super cycle will be getting the money, will be getting the bulk of the investment. and the Nasdaq and the S&P not so much. Now the S&P is always rebalancing. I mean, we've had gold miners, right, be in the top three many times this year. Over the next 5 years, you'll see a predominance of those kind of companies leading and in the top set. You'll have an individual. I mean, a Palantir could do well. There are, Tesla, even fighting upstream if the triple Qs are averaging, 3% a year, 4%. You say, oh, Bruce, they never do that. Of course they do. Ask me how how did the Nasdaq and the .com do when the Qs and the Nasdaq went to 5,000 in the year 2000? Okay, it peaked at 5,000. Do you know how long it took before it got back to that level? 15 years. It receded 81, 85% from the highs. And then it takes a while to work its way back up. We've been on a 15-year run in the triple Qs and the S&P 500. And everybody starts to think that's the norm. So I'm going to do everything that I've been doing and I'm going to get the same results. That's the definition of insanity. You have to understand that things can change. So effort and return can change, and it is changing. I can show you. If you come over to Patreon, I've been doing some videos here. Look at my playlist. If you don't believe me, go back and look at my playlist on my YouTube channel and look under metals and miners. The only playlist I have. You look at my May, June calls on all the miners that I recommended. Almost none of them didn't go up 100% or more. Okay. And that's how we roll. And that's just the beginning, guys. The commodity super cycle, that's what they're for. We haven't even reached, we're just about even with the S&P. But over the last 25 years, gold has outperformed the S&P 500. Over the next 5 years, it will massively outperform. So if you're not where capital's going, you're not playing the right game. You're playing a losing game, right? If you're making 4% a year, you're not staying above inflation, real inflation. All right, guys. So that's my rant. All right, let's move on from Palantir. Amazon came out, had good earnings, a couple weeks ago. Is paying decently. Big mega cap company, Mag 7. But even they will probably struggle here. They're AWS. Most of you guys think about Amazon and you think about retail, right? Big retailer. And they are, no question. But the reality is they make a lot of money and they make a lot of profits in AWS. They're the leader in global outsourcing. So cloud services. So these big corporations, most of them no longer build these big data centers they used to build. They simply outsource all their computing. They do it to Azure at Microsoft. That Oracle has a capability. Google has a capability, but AWS, Amazon is the leader. I have a lot of friends that I used to work with and that are still in the industry. A lot of them are over there. Some of them are with other firms, SMCI and NVIDIA. But it just to go to show you, that I stay close to this. I understand this. And there's reason to own some of them. And the market is changing. All right. So Berkshire Hathaway, kind of a, Warren Buffett managed company. And when you think about it, they're kind of sensitive to recessionary data. So they're the big names. If we're in a recession, you don't stop to shave if you have to go to work every day. You still shave, right? You still need to brush your teeth. So, toothpaste, razor blades, all of those, I call them essentials that we consume, skin lotions, you need all that stuff. So that just because you're in a recession, it doesn't go away. What goes away is the inflationary spending. If you're going out to eat 3 times a week and it's not on an expense account, are you doing that? Right? Are you staying home? Are you watching Netflix? Are you not? You're not going to the movies. A lot of people don't go to the movies anyhow. It's not the environment it really once was and the cost. But the idea is that you're doing something inexpensive and you're cooking at home more when you can. I realize a lot of you are single people, you may be divorced, you may just be single, and you know, you work a lot and then you want to stay home when you're home. But the idea of this recession drives a lot of this stuff back. And we clearly, I've never seen the car defaults at the levels we're seeing now. We're seeing mortgages very high, right? Because rates are there. Most young people can't afford a home. So this is you know, a very stressful environment in a lot of ways. So Berkshire Hathaway, I like seeing this. It's not like a lot of the performers have been performing, but look at this. Doesn't pay a whole lot. It's not your big yielder, 14, 20, 19, but it's a hell of a lot more than you're going to get on a T-bill. So Berkshire Hathaway is starting to move up 547 to 301. Again, when the triple Qs and the SPY are roaring and all that money is going into FOMO and the Mag 7 and all that, Berkshire Hathaway is not particularly doing well. But they're showing signs, right? It's a defensive stock, what's known in the industry. Hood. You guys know I talk about Hood. And I've never said that much positive about it. It's more about, I think Hood, you've heard this a million times, but look at it now, guys. So ignore whether it's a good company or bad company. Let me leave that alone for a minute. So this thing has flown up. I mean, it's been one of the most relentless upside bull environments. Paid a hell of a distribution, even if you're over in Hawaii on Yieldmax. Anybody who's got that fun, okay. But the fact I've just seen two or three new, the Neoses, and granted, everybody's rolling out a Hood underline. Guys, couldn't be worse timing. It's kind of a peak. You know, you can only, any good stock, I'll give you a gold miner. If it goes up, 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 and up, guess what it's going to do? It's going to rest. It's going to come back and retrace 20, 30, 40, maybe 50%. Rest for a few months, 3, 4, 5 months, whatever the period is, and then take off again. Now, I've only said with Hood, I see it as a retail broker, and that's it. So it's like if I come up with a restaurant, it's the greatest thing since sliced bread. People love my waitresses. They love the food. I got the best chef in town. Everybody flocks in there. 2 or 3 years later, there's another three great restaurants. There's a new trend. Well, that's what happens in retail brokerages. Exactly what Hood did. Their CEO is innovative. He came up with things. He went after that young generation with mobile phones. I mean, everybody has a mobile phone today in first world countries. Even in third world countries, everybody has a mobile phone. But trading became more important. I can lay in bed and I can look and see what my quotes are and, you know, make a trade if I need to. And so they're very innovative. But guys, they didn't invent retail brokerage, they just made it better. So a company can come along and acquire them, or they get tired of losing if they are, and they do the same thing they're doing. And don't give me all this tokenization and they're driving this and they're driving that. How's that working for them right now? So the point is, I think Hood is a great yield company. I just don't see it as a park my money there for 5 years and it's going to be a massive performer. It may have another year left of performing well, but it ain't performing right now, and not much is going to, if what I see with the clouds on the horizon. So that's all I would say to you. Understand what you own. Okay. Think of it. What's their intellectual capital? They're not a Palantir. They're not an NVIDIA. You know, you're not going to go out and knock off NVIDIA and have the same Blackwell chip and the same piece. And you sure in the hell aren't going to knock off Palantir and have the same level of software sophistication that they have for large corporations, government entities. It's unique, guys. There's a lot of intellectual property there. I favor software over hardware. I think long term that Palantir does better than Nvidia, but nobody could argue at how well Nvidia's already done. They're a 5 billion market, 5 trillion market cap, guys. They're going back to four. I don't know if they're going to three before they go back and try to get to five again. They may never do that. So if the market environment plays out as I suspect it will, up a little, flat, not what we've seen over the last 3 years, 5 years, that's for sure, or for that matter, 15 years. all cycles, capital rotation, sector rotation. That's what the game is about. You have to figure out, it's like if you chase the puck on hockey, that saying, you skate where you think the puck's going, not where it's at right now. And you have to do that in the markets. Otherwise, somebody smart's going to take your money all day long. The insiders are dumping their shares. The Zuckerbergs, right? The CEO of Palantir, the CEO, Jason or Mr. Wong at NVIDIA. They're not massively selling all their shares, but they're dumping a lot, which is a lot of money. And I'm not talking about the small amount where they have options, they have to pay taxes, and they're just selling some to help with the taxes. These guys know that the markets are very high right now. These valuations, very, very high. All right, guys. So what did it pay? 69 cents. 27. Look at, not long ago, this was like $22 and this was like $18. You cannot have a better scenario. But look at this. $16, $8, $5. Oh my God. What have I been saying about? Yeah, you had a $15, but how do you feel right now if you bought it at 83 and you're holding it at 58 and you go, yeah, but I get paid. Oh, really? $1.84, 5.50, 6.30, 7.50. $9. Okay. You've been paid $9, but you lost $26. So is that good math? If you've had it for 6 weeks, you've gone down $26.50 and you've been paid under eight. Now look, if if you think, okay, you're foolish enough to think for the next 5 years this is what you're going to get, 27 and positive, good luck with that. You're not understanding what the markets will do. All right. So Meta, Facebook, giant company. We're going all in on the metaverse. Here's the other thing, the fallacy here. These companies that invested in AI massively, buying all these Nvidia and AMD and Micron and Broadcom, AVG, they're buying all their chips and all the things that they need for these massive data centers. You know what? You've had a rug pull on that scenario. Amazon's canceled two giant data center build outs, and Micron has canceled one. Do you know why? Not because they don't want to deploy all the chips they've ordered from TSMC and NVIDIA and AMD, all these big data center chips, the latest, greatest, to build out these massive data centers for AI deployment. It's because they can't get power, guys. There's only one source of power that can really supply that, and that's nuclear. And it's now considered a critical mineral, the yellow cake they dig out of the ground. All the permitting, it's 10 years to build one when you come up with the plans to get all the permit. The new administration's trying to fast track that. They're trying to use SMR. It just did a video about. That's what's going to fly. But it all takes time, guys. So you can FOMO to death all the AI, but these chip companies have probably got another 30% to go down. Let's see. They jerry rig it up for another 30 or 60 days and it'll go down 50 or 60 when it does. It's like the markets. So be careful out there, guys. I really feel for people and I understand the need for income. Just be careful. Don't force yourself into a high pair. Realize there's two sides of this. You guys all know what total return is, right? I mean, Misty is the prime example. Hell, I was in Misty for 7 months, loved it. But I also saw that it wasn't going to happen. It could barely keep up with 33% of what MicroStrategy was doing. So I started buying MicroStrategy. And then when I saw all that shift, I got out of that. I got out of Coney. I got out, it wasn't working anymore. Their model is not set up to give you efficient. They're only set up to pay you. And people flock to that. And when they're paying you and the underlying is going up, But think about that. If they're only capturing a third of it going up and your NAV is doubling in 3 or 4 months, then that means that the underlying is tripling in those short periods of time. And you're capturing a 1x, which I get is great, but please understand that. Please understand that's exactly what that is. That's a massive impulse wave up. And nothing just continually does that. The steeper and the higher something runs, the further it has to fall. So, what's the bottom in Misty? $3? I don't know. It's not looking good right now. Neither is MicroStrategy, as you'd expect. So these things suffer the same old 90% downturn. In here, let me give you one final thought on that. When you guys defend it, and I get it, you come out and you say house money, whoever, I understand house money. I think it's great. I use that strategy when I invest in a stock. I say, hey, I love this stock. It's going much higher. It's gone up. Say it has no income. It's a 5x. So it gets to be 5x. I pull out my investment. Sometimes I do it on a 3x. Now I may be bullish for 4 more years, but I take my money back and now I say I'm writing it for free. But guess what? I don't like this argument, and explain it to you. So these fanboys out there of Yieldmax, they're out there selling you on house money in these kind of positions. Oh yeah, well, I bought Misty at $20. I got my $20 back in 8.3 months. I was tracking it. I know it. But from the point that it got back the last time to 20, I was not bullish anymore on MicroStrategy, and I openly said that. So that person that bought it at 20 collected all of that $20 back and is sitting there audit on 20, then I challenge them to tell me, yeah, they're getting a little bit of income. But every time it goes lower, that income gets smaller. It was never under $1. Then it was. Well, wait till it's under 50 cents a month, which is four weeklies. That's where it's going. And maybe under 40 cents. So the question becomes, is it a good investment the last time it went to 20 or went to 18? And they argue, yeah, but it's house money. I'm writing it for free. Okay. The only time that ever comes back to any truth matter is if it gets down to $3 and all of a sudden Bitcoin takes off and MicroStrategy takes off and they start going up. But wouldn't it have been better to sell at 18 and buy at 5 and maybe it went to 3? Then it would just be to write it down the whole time. Because if you got used to that high income, so that's part of my argument. That's how I analyze. I constantly force myself to question things. Okay. I never buy into that drip scenario. Now, dripping, if you want to drip, go out and drip a gold miner, go out and drip GDXW. Go out and drip GLDW, right? You got leverage, you got one on physical gold, you're going to get greater performance on the miners because they have leverage to the gold price. It's a geometric relationship, not an arithmetic one. So use common sense. It's not common, this is something that it's taken me many decades to really understand. So I challenge all of these little wisdom statements that high yield people always try and say. So don't buy into it. If you want to drip something that's going to be good for 5 years. It's going to have higher highs and higher lows over 5 years. Okay. That's because of the capital rotation and the sector rotation. Called a commodity super cycle. Go look at what happened in 2001 to 2011. Go out and look at what happened in 1971 to 1980. That was capital rotation. Ask me, how did the Dow, how did the NASDAQ do in those periods? Not well. The commodity super cycle took over, massively outperformed. And it lasts for many years, right? I'd say we're probably good to 2030 to 2032. So we probably got 5 to 7 years. This one might be like a 8 year commodity super cycle, but we haven't really seen the stocks get, and there are commodities right now that haven't woken up. Oil will be a massive play going forward. $140 oil. $240 oil. Okay. That's not good for many things, but that's the truth. The energy demands that we have, the world needs double the electricity it has right now by 2035. We can't even build data centers. We have to turn them down because there's not enough power on the grid. And it's not like you can just spin that up in 3 weeks, right? Why do you think they're deeming all these things, these critical minerals and rare earths? We can't exist as a high-tech society without that. And we can't defend ourselves. We need weapons, right? Walk soft and carry a big stick. I'm not talking about weapons that you go out and use, but weapons that defer conflict. And you need leading edge, those capabilities. We've always had that. But guess what? Now it's controlled by rare earths. And China doesn't want to give them up. And we've been too green weenie oriented and not allowed us to drill and pull those minerals out of the earth. Okay, I'm not talking about ocean drilling and I'm talking about oil. I'm talking about minerals, rare earth minerals. Absolutely critical, guys. And it only happens, you only realize it sometimes when it's too late. So anyway, I'm on my rant. I just want you to be careful in looking forward by using the roadmap of the last 15 years because things will change. There are what they refer to as lost decades. I don't think over the next 5, 6 years you'll see a negative Dow or a negative NASDAQ, but I do think you'll see a flat to a mediocre, 2 or 3% instead of 14 or 15. And then you'll see 35, 40% in your commodity areas. Oil and all the infrastructure, oil infrastructure, the tool companies, the drillers, the shipping, the transport, the oil service. There's so many areas in that. Now, what I do on my Patreon is always evaluating income funds. And some of the commodity sectors barely have them. But now you're starting to see them, guys. Like here, my two favorite ones are GLDW and GDXW. Another favorite, not by Roundhill, is Amplify with SLJY. Why? Because they're part of the metals and miners, right? And their income funds. So they're the winners to me if you want to talk about retirement or steady income, and even those, I'll trade those a little bit, not on any kind of daily. I mean, swing trade where maybe I'll get out for 4 weeks because I think it's run too high or 2 weeks, whatever it takes for me to buy lower. All right, so Meta not doing so well. Look at this. You do not want to see a 2-to-1 ratio. Not good. Look at this. Being killed. Netflix starting to. I would have thought with the recessionary environment we're in, we haven't deemed it a recession, but administration doesn't want to admit that. Governments never want to do that. I don't care what side of the aisle you're on. They just don't want to admit that things aren't as rosy. The minute you don't want the public out, they riot about enough stuff now. You don't want them out rioting on, you know, things aren't working. But the truth is, inflation is much higher. That's another area, guys. I think short term, the next year, inflation will be within the 3%, 4%. It's probably really 8, but by the CPI and PPI. But by the end of this decade, it happens in every commodity super cycle. You're probably going to see double digit. It doesn't happen in every super cycle, but most of them. We parallel the 70 super cycle more than we do the 2001 to 2011. But I'm expecting double digit. I mean, you could probably buy a 30-year treasury in 2032 and get 14, 15%. That's how I see the future. Okay, guys. All right, let me finish up on this. You guys, I've ranted a lot, but I can't help it. I know a lot of you like to listen, get tidbits of information. And for those of you that don't, sorry, it's my channel. That's what I do. Okay. That's why I have a small audience, to be honest, right? But the smart people are making a lot of money because they know what I'm talking about. The people that just want to go watch the fanboys for entertainment, not so much. All right, guys, 340 set, not good, right? So Microsoft's not really getting it done either. And by the way, guys, you can see here, I'm not calling out the numbers. Any yo-yo can call out the numbers. Okay. Just read them. I leave them on the screen. The print's big enough. MicroStrategy. Oh yeah, that's a good one to own. So I may love Roundhill, but I don't want any part of this one. Minus $18 and you've been paid 250? No, thank you. That's 1550 in the negative, guys. So you've lost $15.50. That's that's 35% if you've been in it since 725, right there. You were, yeah, it's down 10. It's just not in a good stead. Will that ever recover and go up? Possibly, guys. Bitcoin is a unique animal, but it's not its time right now. I don't know when it will be. I'll be watching and I'll let you know. Now, I like what this has done, but what have I been telling you about it? I've been telling you that it looks very toppy to me. And AMD has been one of, remember when I say the semiconductors, I'm talking about the pressure on all of the chip companies. NVIDIA is showing it more than AMD does. Right. AMD is a data center chip company, but not to the degree that NVIDIA is. So when these data centers get canceled, it's going to hit NVIDIA harder. But AMD is going to have a hard time going up when the semis are going down and the sentiment shifts. But so far, they've just been a rock, right? But I imagine this starts to shift. Nothing goes straight up, guys. You see it. This thing kind of peaked at 71 here. 60, it's up now, but I don't suspect that this thing could easily go back to 50 or 40 and very likely will. What's 40%? 28 on that. Yeah, I think this thing could see 45, 47 again. So just understand that. Now, I'm not perfect. If something happens, and like I said, they manage to, push the market up higher for another 60 or 90 days, some kind of stimulus, anything can happen, but then it'll probably go down 50 to 60% after people realize that it's not really happening, right? Avco. Now that's been hit harder. Look at this. So Avco, its chips are more in the communication side and it has a lot of software in it. But those data center that I'm talking about has an impact on them. And you're seeing it right here. Look, 3 out of 4. And then if you go over 6 weeks, it's break even, but you don't own a great company. Evco's been a fantastic performer, but not so much now. This is turning red. This is still big. But do you want to own it when this is 7 under and this is 12 or 13 or 14? It changes the dynamic. Right now, it looks like a smart buy when you had it. But this is a warning sign, guys. Google's been fantastic regardless. I mean, it's down because the market's been hit. And it's certainly if the market takes a 25% hit in tech and the triple Qs, it's going to feel it. But it's been a great fun. That's why I like Roundhill. If that underlying turns bullish and moves up, like this one's gone from 50 to 65, go look at the underlying. They're probably capturing 60%. If you're in GUI, you're probably capturing 35%. So how in the hell can it not outperform Yieldmax? It does. It kills them. That's why I have 17 of 20 funds where they both have the same fund that Roundhill win. That video's coming, guys. Look at Costco. There's not a comparable, so I can't tell you. There's not a Costco. Although I think Yieldmax has applied for it in the past, they just haven't launched it. Pretty much break even, right? Not much down, a penny, 14, down $1.39. Uber, nothing to write home about. Almost, more down than up, but very early. I mean, you can't judge a fund by that, but that's indicative of the market. Look at ARM. I don't know what it went down 380 and it went down. For those of you that don't know, that's a chip technology, guys. It's been used a lot in the mobile phones. Apple uses it in some of their products. It's starting to challenge um, the chips that come out of TSMC and some of that strategy. But I haven't really read on it in the last 6 months on where everything's trending. But most of these, regardless, most of the techs are just massively overvalued. Their PEs are through the roof, guys. Well, who's not through the roof are the metals and mining companies. Those guys are going to be printing cash. Even at 4,000 gold, we're at 4,200 gold. We're at $52 in silver. I think that goes 3, 4x. Probably silver goes to 250 and gold somewhere from 10 to 15,000. I mean, it's central bank buying. They know what's going on. And guys, I'll tell you this as a reminder. You watch my videos. It's not about the metal going up. It's about the dollar going down or whatever currency you measure it. Gold's at all-time highs in all currencies. So it's the currency, it's the paper, it's what governments do. It's end of cycle. It's end of I wouldn't say end of civilization. We're not going to all die, but what happened to the Roman Empire? They decay within. What happens to all first world leading, reserve currency nations? UK was that, right? UK is still a strong in a lot of ways, but it's got the same problem that France, Germany, the US, most of the first world countries. It's got massive debts to GDP. The US is 130%. Very similar in Germany and France. And then they've been hurt with the migration crisis, right? It's easier for those people because Europe is so land bound. There's so many people coming into the country, even the Nordic countries, you know, really kills those budgets, right? And France is very socialistic to begin with. Strong unions, you can't fire people, a lot of things. And I'm not picking on it. There's no perfect thing. France produces a lot of good technology. They moved to uranium. Their last I knew they were 70% on nuclear power, which is awesome because the only base load that can that's not intermittent. A lot of this other power, wind and solar and all these things. What happens in a freeze with solar? What happens in a hurricane to windmills? What happens to a freeze in windmills? They ice up and stop working. So don't get me wrong, I always want to see things happen and we progress, right? But you talk about low carbon, that's nuclear. It is the most efficient, expensive, but the most efficient technology for energy and most stable when it's functioning. All right. Pabo, I like Pabo. I mean, this isn't trending well because there's market pressure. But if you look at the underlying PEs of the big Chinese giant tech companies, Alibaba is Amazon, at least without the AWS. Massive amount of people shopping, way more than Amazon had. So I kind of like that over multi-year. GDXW, I don't have to tell you that's my favorite right now. And last week I did a head-to-head 1 week, and it's like GDXY was a little bit ahead. Now, when I do that comparison, we just blown them out of the water. They cannot pick up on the NAV like this. Because Yieldmax can pay you. Can they maintain their NAV? 33%. But GDX moved, and we probably captured 60% of that move, so close to double the percentage that GDXY does. And that's what you want. You want a long-term bull company. Okay, this needs to be. Sorry about that. I didn't put my conditional formatting in. Okay. People ask me this. This is a great question. I get it asked in Patreon all the time. Hey, Bruce, they launched these two funds. Don't you think that gold's gone up, over the last couple of years, a real high percentage, and the miners are starting to move up? Shouldn't I buy more GLDW than GDXW? And I said, it depends. What it depends on, do you want higher NAV increase and do you want bigger payments? By GDXW. Well, of course people want bigger payments and high NAV increase. Why is that? Because miners have leverage. Okay, I explain it. I say, hey, if you have $4,000 gold, and you've got a big cap miner, a Newmont, and it cost them $2,000 to dig the um, oil out of the oil, dig the gold out of the ground, and they sell it for at 4,000. They made a 50% profit of the 4,000. Okay, so that same gold company, when they dig it out, okay, for 2,000 and sell it for five, 6, 8 months later, yeah, technically you could say maybe it's 2050. They had a tiny bit of inflation, fuel, something. Okay. But the point is, but the gold price only went from 4,000 to 5,000. So gold price went up 25%. But their profits, okay, went from 2,000 to 3,000. So their profits went up 50%, but the price of gold only went up 25. So that's what I talk about. They have leverage. Now that all miners today in production are making a profit. They wouldn't be producing if they weren't. They put those mines on care and maintenance. There's a lot of companies now pulling silver miners out that needed $30 silver, okay, to make a profit. So they're restarting those mines. Those are some good companies to get in when you find that scenario. The mill's already there, the permit's already there. They just got to lube things up. They got to check belts. They got to, retrofit. Depends on how long it's been idle. Maybe it's 10 years. You clear out the cobwebs, the dust, you check everything out, the engineers, and you get it. But you can do that in 3 months, guys, and you can be producing. And all of a sudden, that adds massive dollars and profits to a company that does those things. So that's what I do on my Patreon. I go look at the smaller producers that are acquiring companies, that are acquiring mines, and they're retrofitting and they're bringing them in. And I call them 10 baggers, 10x opportunities. No, they're not paying a dividend. They might be 20 cents, they might be $2, but you're going to buy that stock, and in 4 years or 5 years, you have a hell of an opportunity to have a 10 bagger 10 times. You just got to ride the volatility of the market. All it's going to take is 6, 7, 8,000 gold, and I think we go to 10 or 15. So that stock could be a 15 bagger. So that's the kind of stuff I do at Patreon to help the people in this capital and sector rotation. Go talk to people. Talk to my Patreon people that have been in there since August, right? That took my advice and bought these. Go, if you don't believe it, just go look at my metals and miners list, guys. I put my reputation on the line and I said, buy these. Do you know what? I'd get 2 or 3 thousand views on my Yieldmax and Roundhill and all that. I do one of those videos and I get 500 views. But guess what? Maybe 10% of those people went out and bought them. And when I started Patreon, they're like, Bruce, I can't believe you were right. And they're over in Patreon. It's not like I'm a magician and I know everything. I just know this. It's how I retired early. It's how I found things after the dot-com bust. Okay. So I do these rants. I talk for a reason, trying to get your attention. I'm trying to get you to understand something. Okay. I don't know why, but I find that females are a little more open minded to us males, right? I hate saying that sometimes, knowing my gender, but it's the truth. Okay. We get very we get in a thing. And I'm a bit the same way. I understand Bitcoin. I've been an investor in Bitcoin. I've played some of the high yield income funds. I knew to stop on the MicroStrategy one and do. I owned some BITO for 2.5 years. I've been in and out of YBTC, but it's not my deeper expertise for me to go in and tell you about XRP and Ethereum's got this and the payment systems. I understand a lot, but I'm no expert in here telling you and banging on the table and ranting, even though I think there's still potential for crypto to go much higher. But I don't think now it has to show me, right? It has to break out. It may go to 50 before it goes to 150. We'll see. I don't know. I'm just telling you what I see right now. All right, guys. So these are winners. This is my Patreon. If anybody cares, come over there. I got a free tier. To be honest, you're not going to see much. 1 in 10 videos you might see. I got a $5 tier, a $10 tier, and a $50 tier. The $5 tier, I do general videos. Hey, here's uranium, right? So you saw on YouTube the freebie. And the reason I don't put all my content on YouTube anymore is because I get paid on Patreon over there. People value it. Okay. So I'll do uranium. Why is it going to go higher? What's behind the uranium momentum? Why will uranium blow up and go much, much higher? Why will the uranium miner? Then I go over and I analyze the miners and I give you tables around which are good miners, which ones I've owned, what are good this. And then I put that content over there. And on this last one, I put it in for my 5, 10, and 50. You say, well, what the hell are you giving somebody in 50? Well, I give them a personal call. I say 45 minutes. They average about an hour and 10. Depends if I'm backed up with somebody on an hour at the mark. But if I'm not, I'm generous with my time. But I help people, right? I help you figure all this out. Have to realize I've got 45 years in the markets. I've been writing and selling options and using options for over 40 years. So you learn something, and it's not just I just had an option class last night with a terrific person. Has been in following my YouTube for a year plus, been in my Patreon since August, went out and bought a bunch of the miners. I help people. That person really wanted to learn options. I've taught about 10 people now. I don't teach it the traditional way. I know guys out there for $100 who are selling you, an hour video. Hell, I put out options 101 on my channel so that people could kind of understand how to use them. But I'll tell you what, you're not going to learn it that way. There's two sides of this. I was telling the person in a session, I said, you know what? There's all the mechanics of options, the Greeks, the theta, all of that stuff. There's the math part of it, understanding, puts and calls, buys and sells, combos, more sophisticated ones, spreads, collars, you name it. Okay. That's only half the battle. You can go learn that. I've learned that. But guess what? The second thing is, what are the strategies? How do you deploy the options? What do I look for? What kind of setup do I look for when I sell a put, quote, to hedge and or buy the shares cheap, right? I buy a put if I absolutely want to hedge. Sometimes that's not the right way to do it. Sometimes just go buy a 2x inverse ETF or a 3x inverse ETF. Okay. There's all kinds of strategies. So I go over all that stuff in my Patreon, guys. I'm getting long here. I need to get off and get the next video comparing Yieldmax and Roundhill. I think you'll enjoy that because, like I said, I added more funds there. So again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Bye for now.